Yeah, thank you, Stephen. As, I'm not going to do that because it's a long career and I will maybe using some time that you like to have all of the conversations. But it's interesting. What I'm going to talk to you is about a new zone. It's Zone EMENA, which is something that is combined with something that I did already between 2006 and 2009, a new market that is coming. So my conversation with you will be based on 4 points that I'm going to explain. What you have seen here, this document, this is the front page of a document of 4 pages, which I use with more than 100,000 people that work in the zone. And you see here is what I call the priorities and commitments that we have designed for this year. And I'd like to highlight 2 things here. The first is to be successful in this new zone. Our vision is to be the most innovative, competitive, and inclusive company in the area that we compete, that we define about helping people having tested and healthier choices for them and for their families. And I like to concentrate on these 3 words: innovation, competitiveness, and inclusivity. And the way we're working in the zone is by basically saying there are 4 things that we need to do to achieve that. The first is growth. The second is efficiencies. Because in a real difficult context that we are living today, not only in Europe, but also in the Middle East and North Africa, if you are not able to deliver the maximum efficiencies, you would not be able to fund your growth and at the same time to deliver good margins for all of us in the company. But in the context of not only Europe, but also Middle East, but specifically more Europe, this concept of inclusivity, which I define, inclusivity is be in and not be out. The company, the products, the people, we need to have strategies, ways of working, the way we work, where we are part of the society, and we basically address the challenges of the society, which are not all on them linked about products, margins, and innovation. But it's the way you do things. And that's a very important element on our way of doing things, basically in Europe, but even more so with what's happening in the world in the Middle East. And the last point, which for me is the most important, is this can only be done if you have the best people in the organization. And I take a lot of time talking about people. And some of you know that I'm passionate about football. The way I define a people is I say that I need to have a bunch of people that are able to play in what I call the Champions League, and then I need to have a kind of people that are the Junior League that one day are going to replace them. And that's basically a kind of hidden dossier that I travel everywhere in the world with names of people, and you're going to see, I'm not going to talk about the people specifically, but the changes and how do we move the bench, like in ice hockey, that you have more people in the bench than people that play the game. I'm not going to spend much time here, but that's to give that if there is today something, if I compare this with my previous experience, specifically in Europe, is that today we're living in a very volatile world. And this volatile world, which is defined by the pictures that we have here, you can add to that the Brexit, you can add to that other things, is creating a lot of tension that affects our people, our consumers, the investments we do. So we need to be far more demanding on return on invested capital. We need to be far more demanding in the way we address consumer needs, because things changes at a speed that it is unprecedented. I'm not talking about areas like e-commerce, digital, which is part of the way we're doing things. My previous experience, both in nutrition and in Nestlé Health Science, has given me the idea that the concept of digital and the e-commerce is going to be a big driver of change in the way we do business, even in the most traditional categories that we have in our food. This context could be defined by 4 figures. I could have selected more. Is that we are talking about a region that the volume growth has been basically close to zero in the last 5 years. And I'm talking about Nielsen average of products that we are basically in the marketplace, plus others. This is just the food and beverage context. Inflation is not only that we don't have inflation, it's that we have deflation. And you know how difficult it is to create future and to develop efficiencies and having good margins in a context with your prices and the context of consumers are basically looking at the prices might be lower in the next month. Retail concentration, that's something that is having a big impact today. I wonder what you have read about buying alliances, companies that basically the only thing that they do is that they took together. The question is whether this is something that could be acceptable, but they put it together with the only objective to try to buy the cheapest price when it comes to the sale of our products. And this is happening today in countries and above the market, specifically in this case in Western Europe. But the main element of some of them, except the e-commerce, in the so-called brick and mortars, as you will define, is basically they are looking to compete on the basis of prices. I wonder what you have seen, but I think it was in January that Asda declared publicly in UK that they are going to dedicate £500 million just to reduce prices in all stores to compete against Sainsbury and to make the life of Tesco miserable in that situation. And this is just one part. A country that was supposed to be more healthy, more relaxed, which was the UK, today this is where the fierce battle in terms of pricing is there. And the last point is what we call consumer confidence. This is a Nielsen index of fast-moving consumer goods. This is not only our products, but just to give you a sense that if 100 is neutral, we talk that the world is around 97. The amount, the average of the countries that we are in talk about the 78. Things like job prospects, and you're going to see that we have an important initiative in youth job creation, is that less than 1/3 of people believe that the future, the next year, will be better than this year, and that's why there's a lot of people that basically are taking their personal finance in a situation where you don't have interest rates, and they are basically containing a lot of consumption. And this is also affecting consumption of fast-moving consumer goods. That's the context that we are in. Just two charts to give what we are talking about, as this is a new zone. So we are talking about a region where Western Europe still is the dominant place, 70%. You have Central Eastern Europe, 13%, and Middle East, North Africa, 17% of the sales of Nestlé in this area. It's not only my direct responsibility, but all the businesses that we have in Nestlé in this category. And what you have seen here is what has been the real internal growth of these three areas in last year, which in the context of what we have done, we consider this a very good results. Just to highlight something is that this growth, you need to take care that only in 2015, between 14 and 15, we have lost more than 100 million sales in countries like Libya, where we're not present today, unfortunately, countries like Syria, because of the ISIS, and countries like Yemen, where basically today all our distributors has been basically bombarded and our stores has been destroyed, and we're trying to recover the situation. The Nestlé in this part of the world is around 27 billion. I'm talking about 69 countries. We group the countries in 21 markets, around 110,000 employees, and around 171 factories. Another interesting element is that this is represented the balanced product portfolio in this area. And this is what I call a mini Nestlé, because the percentage of distribution of the presence of our products is very, very close. It replicates quite well the Nestlé overall, with two exceptions. Our presence in dairy is far lower than the average of the group, and our presence in coffee is higher than the average of the group. Specifically, Nescafé Nescafé Dolce Gusto, and of course Nespresso, which have a predominant position in this part of the world. The rest is quite similar in terms of strength if you take big numbers as they are represented here. The zone is doing well. Is doing well in 2015, was doing already well in 2014, has been accelerated in the first 3 months, and I'm quite convinced that these figures roughly will stay along the first half and maybe the end of the year, because the prospects on the innovation and the plans that we have give me confidence that unless there is a big crisis that I don't count in addition of what we have today, we can deliver that. What you see is the most important one is you see the growth in terms of RIC. What you see here, for example, in the first quarter is this effect of deflation, which has in part been contained compared with 2014, but is clearly lower than the year 2015. And also, by investing behind the brands and helping by a disciplined process in terms of making choices, I'm going to talk in a minute, we have been able also to improve the trade operating profit, and I'm convinced that this year we can also improve this figure again. Just one point, you might be surprised because you say, well, there's Middle East here. One of the reasons why we don't have inflation in Middle East is because of milk prices. Because our business in Middle East is very much depending on milk. That's the only way, this is the only area where, powder milk is important. It's not in Europe, it's not in Eastern Europe. And here, basically, the price has been contained because of the reduction of the milk prices over the years. Maybe the situation will change. I don't think this will change this year, but I'm sure in the future this situation you will see this again going up. Now, let me talk about the first thing is growth. I said to growth, efficiency, let's talk about growth. And I have a few charts to talk about that. The first thing is the disciplined process that we do about making choices. And this has been a mantra. Already in 2006, when I started in the zone, I developed what at that moment, and maybe some of you might remember, a process called cell methodology that today is called Atlas. And since then, since more than now 10 years, we have been using this to define where to invest, where to make priorities. In Zone EMENA, just to give you a sense, we talk about 750 cells. And a sales is a business in a channel and in a category. And we fundamentally review this every year, and we make the right decisions regarding the investments behind that. So in the case of last year, and it will be probably the same this year, we have also focused our investments in CapEx. 2/3 of the investments has been done at 1/3 of the sales, which is basically where the growth is coming. And you will see that this is very much in areas like the pet care that Bernard, my colleague, was talking before to you, and also in terms of coffee. The process of analyzing every cell by every country and grouping them by category and by geography give us the possibility to decide whether to put marketing expenses, whether to invest, and which are the projects that we're going to manage at multi-market level in EMENA. Specifically, and I know that you have seen this figure for a long time, it's no news for you, but let me talk about that because I was already in 2006 when I started that. And this is where we started with 6 million. I was the head of Europe at that moment, and at the end of the year we did 6 million of sales. If someone would have ever told me that 10 years later will be in 1 billion or even more if you have constant currencies, I would say this is an outstanding result that even myself would have not believed. The most important thing is that we have been doing that while investing in launching the Nespresso concept from 1 country to 43 countries in roughly 8 years. And some of you may have questions about, are we getting money out of that? Let me tell you 2 things. First, the gross margin is higher than the average in coffee. And the second point is because now we are more present in the majority of countries, now we're going to deliver money, that this money is going to basically improve our margins, as we don't need money from one country to invest to develop other countries. As we basically said, there are not many new countries in EMENA that we're going to launch that. Maybe some of them, and maybe the one that we're discussing is Maghreb, but as you could imagine, that's not a priority compared with Russia, with Germany, with Spain, with Italy, with Greece, etc., and Poland, Eastern Europe, etc., and Middle East today. This is the first contributor to the portion coffee category growth, and we are number one with Dolce Gusto in machine sales in retail, and number one in capsule sales in retail. As you know, we don't compete in other segments. And also, the e-commerce is a very important part. It's not as important as you will have in espresso, but it's quite significant, and we're pushing this as we speak more and more, because we believe there are opportunities also to develop that. A second element that is basically an example of something that has been talking to you before is pet care. And some of you were asking questions about premiumization and premiumization in Europe. So this is just an example. These are two launches, and this is the index price per kilo that we have in Gourmet Gold. In this segment, we are market leaders, and this is the product that we recently launched. It's 2.8 times the price per kilo in the marketplace. And the other interesting one is that in the trend that in US is very important, 25% of the market of pet food in US is in the natural segment. This is something that we have launched now, is this new brand called Beyond, which we already had. I remember when I was managing the Americas, we already had this launch in US. We're now launching this in retail. This is the first initiative, big one, that we're doing it in a big way in retail. And you can see that it's not only that we're basically addressing a consumer trend, a need of more natural products, more natural ingredients in the area of pet food, but also in terms of the pricing per kilo. So that's another example of how a process, and you make the choices, and we have decided to invest that. All these investments, like the one that we're going to present in the next chart, are all multi-markets. Now, it's not only that. We're also addressing new trends. I'm sure that in the innovation exhibition that you have been seeing before, you may have seen some of that. But I'd like to highlight that in coffee, it's not only about Nescafé Dolce Gusto, it's about soluble coffee. In soluble coffee, we launched some time ago this brand, Nescafé Axera. This is micronized coffee. We were, in a way or another, trailing behind some of our competitors in the area of super premium coffee in Central and Eastern Europe. And with the launch of Axera and micronized coffee, we're basically regaining that. This is a huge product, and I'm sure this is going to be a big success, as it is already today in UK. Then a new cappuccino, a better formulation of cappuccino, where the foam is white, and that's creating a kind of very good competitive advantage. It has also been launched. In the area of healthy eating, that's basically a gluten-free. You know, gluten-free is today, it's quite relevant more in Southern Europe than in the north of Europe. And that's basically the Buitoni. And we have pizzas today under the Wagner brand and the Buitoni that are addressing this segment. This is a concept that when we took the Create the Zone, this was a concept very well developed in Israel by one of our companies, Osem and Tibal. I saw this concept that we define this flexitarian, meaning people that like to reduce the consumption of meat, either because of environmental reasons or because of health reasons. We have decided to take this brand and converted this in an European brand. And we have just launched this in Germany. We had now in a market in Spain. And I'm sure that this new trend of reducing meat consumption and having a brand we call Garden Gourmet, it will do a big inroad, because this is very much where consumers today are looking in terms of looking to the future of food. Children health, this is Nido. This is basically Middle East. This is basically using a new nutrition product in order to enhance the value of the kids. This has been launched in all markets in Middle East as we speak. In the area of pizza, this is a snack. This is not really a pizza, it's more a snack pizza called Rustipani. This is under Wagner, this is Germany, but the same brand, Rustipani, is being launched as we speak. now that we have capacity invested in Germany, in all European markets. Movenpick, as you know, a big and important super premium brand, namely in Switzerland. Last year, we launched in Switzerland for the first time sticks. Sticks is something that we didn't have before in Movenpick brand. It has been a good success in Switzerland, which has given us the possibility and the decision that we are going to launch this in all markets. And then in confectionery, I know you have seen some of these products we call Recette de l'Atelier. Basically, these products have different brands, Perugina in Italy, Caillé, Nestlé in other countries. This is a patent technology. This is a kind of black kind of chocolate with good pieces that we are launching in all markets. We have introduced already in 4 markets with good success, specifically in France, which is a key competitive market, but where black chocolate is very well appreciated. And the other one is Baci. This is a brand that I am passionate of that. I think this is a brand that deserves more focus. And we've decided to create a kind of unit, a kind of a small unit in Italy, replicating the success of San Pellegrino, basically using San Pellegrino people and asking them to help us to create what we call an international small unit where we can develop this brand in a more performance way as we have done so far in the rest of the world. And the project is today being discussed and being born. So I don't have a lot of news today to tell you, but I'm sure that in the future we can basically fundamentally increase the weight and the importance of what I believe is one of the most unique products in the chocolate area, and a product that you should know that the formulation has not been changed over the last 80 years. So when we talk about innovation, time to time we need to think that when you have a great product, you don't touch the product, and this is still doing a good job. Another area that maybe is specific about EMENA that I like to talk to you, because I have dedicated a lot of time to that, is what I call that we embrace complexity. The question is how to manage this in an efficient way. And here we have different business models. In fact, in Zone EMENA, we have the most different business models in the company, from business that are managed locally, for business that are managed in different ways. This is what has been recently announced, the creation of a joint venture in ice cream. This is in terms of not only all the EMENA business, but even Brazil, Argentina, Philippines from us, and then incorporating South Africa and Australia. Lactalis Nestlé Ultra Frais. This is a company that was created basically 10 years ago. And I am very happy to say that our brands today, and it's quite impressive that La Laitière is the leading brand in their segment in France, which is something that we believe is a great success for a business that has been always in a difficult situation. The situation is today very good. We have also CPW. I think you know this quite well. We have just celebrated the 25 years of the creation of this joint venture. And then we have other models like the Purina. Purina is managed at a regional way. You have been seeing what Bernard has presented to you and the results. And maybe the last initiative is something that we took this year, is that in the context of the big and the acceleration of competitiveness with new competitors like GD that is happening today, I thought that we're doing a very good job in coffee, but we need to take some decisions above the market in order to be far more quicker and identify the new trends. So we have created a unit called Nescafé EMENA, basically without adding any people. Is basically deploying the responsibilities, allowing someone to take full P&L responsibility, and decided about above-market allocations, where we can decide whether we need to compete, which kind of products, and then rolling out initiatives far quicker and far more efficient, I believe. This is today being formed, and it will be completely operational as the 1st of January next year, and we're going to basically to reshuffle that. And in addition, this is what we call the local managed business. Just to give a sense, in the weight of Zone EMENA, not Nestlé in EMENA, the zone that I'm responsible, 50% of the business are managed above the market. And if you look at Nestlé in EMENA, is 1/3 are managed at the market level, all the others are managed in a way or another, either through joint ventures or above the market. That's a very important way, and we embrace that. And I always said that the way you define the structure is that a structure follows a strategy, not a strategy follows a structure. And that's how we do. We have done a huge amount of discussion this year in what is the best way to compete in some categories, and we are basically putting all this model at the same time in our organization. Channel, I'm not going to spend too much time. I think we know that that whenever, wherever, is that we are in all channels. Maybe just one comment is that we are very proud and happy to the result that we're having in e-commerce online. Our share online is slightly higher than the offline share that we have in the marketplace. That's a key metric that we're following. We are growing around 20% this year already in online sales, and we believe that the category of the pure players, the Amazons, the Ocado of this world, our growth is even more than 35%. The traditional trade, it remains a key element and a key player in Middle East. As you can imagine, there, you know, if you go to Libya or you go to Iraq or you go to these countries, and Morocco, we don't have the same kind of approach, even if the e-commerce is growing everywhere. What is important in this part of the world, we have great expertise when it comes to digital. The way that we're working on the Maggi in the Middle East through digital empowerment is quite outstanding. And maybe you have seen something of that in your innovation exhibition. So that's about growth. Now, when it comes to efficiencies, basically we follow a simple model. How could you continue fueling growth and delivering results by playing in a context which is one of the most competitive in the world, where you have inflation? And basically what we do is, what are the efficiencies, and we measure that. This is the efficiencies of 1 year versus the previous year in terms of cost distribution, factory overheads, and overheads. These overheads is 11 basis points this year against 10 basis points in the past year, and we also have an objective of continuing fueling the growth through investments, through efficiencies. This is in addition to the fact that, as you know, we have been also helped by the cost of raw materials that we have been very played. That has helped us to invest in marketing, consumer-facing spend, more than 80 basis points last year, which has helped us to keep, maybe it's not only gaining, it's keeping and gaining share in 60% of the sales that we follow through Nielsen or other measures. We basically follow in EMENA between 200 to 250 different sales when it comes to market share, 60% of which last year we were growing or we were basically keeping and holding our share. And all this, of course, we're able to, if you have a good growth, as you have seen, you basically deliver good results in terms of profit, while you keep what I call the sustainability of this model. Basically is based on making choices, being very tough and efficient in terms of costs, and also investing. It looks pretty simple, but you need just to make it happen, and you need to have the discipline, which is the most difficult part, in order to make choices. And making choices basically is deciding what you are not going to do, versus then concentrating on put a list of things and then you have the list. So that's about efficiencies. Now I talk about the third and the fourth point. Let me talk about very quickly on what I call inclusivity. You know, Europe is a place where you have the most critical, informed, and critical consumers when it comes to companies like us. So it is clear that we need to look a more holistic approach when it comes to the way we do business. And this, I have identified 3 areas that we are very active on. One is in the area of environmental sustainability and all initiatives that we are doing and we are committed with our partners. The second is nutrition, health, and wellness. That's obvious. This is where the company is being basically focused, but you are going to see that I'm going to concentrate in areas like sugar reduction, like salt, etc. And then the concept of employability and basically connecting with the authorities, specifically in the case of Europe in terms of Brussels, where I'm present there more than once every month to have discussions in terms of projects that we can go. And this has been helping us to improve not only the perception of Nestlé within the political environment, but also in terms of the organizations and the youth organizations that today exist different in Europe. Environmental sustainability, just 3 figures. So by 2020, all our factories with no exclusion will have factories without waste to landfill. Today we're at 40, and we believe that this figure is easily achievable with all the investment we're doing in this category. CO emissions, that's a very important point, that despite the increase in terms of tonnage, we are reducing, the reduction is around 35% reduction by ton of product produced in the zone. And then another element that you know is close to our heart also is water consumption. And this is basically a reduction that we have committed to do between 2010 and 2020 is 44% reduction in water consumption per ton produced of our products. Nutrition, health, and wellness, that's the commitment I like to look. First of all, let me show a product that is very important. Nesquik is a jewel in Europe. We have competition is more in the private label. We don't have big competitors there. That's a category that we have been growing. But we believe that the concept of sugar reduction is something that we need to do while keeping the taste. And we have been doing that. We have just launched this product. It's 37% of sugar reduction. It gives you 5 grams of sugar per serving, is what we call nutritional foundation, let's say, compliant. 3.3 grams of dietary fiber, and this has been launched in France basically 3 months ago, and we are going to relaunch this in all markets where Nesquik is important. Then, in addition to that, that's the commitment that the company has publicly committed, and you can find this in the annual report, about sugar reduction, sodium, saturated fatty acids, and we can say that in the case of EMENA, the figure, as we speak today, of sugar reduction is 7.6% versus the 10 objective at the end of the year. In sodium, we are higher than 8, and in saturated fatty acids, 6.2. And in trans fatty acids, we have not had anyone coming from hydrogenated oils at the end of 2016. That's very important because there are more and more people. Basically, they lose something today. That how many people, when they buy a product, the first thing they do is exactly that. This movement is basically having a big impact in the way you market and you develop products. Looking about the composition, which kind of composition you have in this product, and that's something that for us is very important. And this is one of the areas where our renovation efforts on research and development is being taken in this year and even previous years. When it comes to youth employability, you know that that's where we're talking about our presence in different European institutions. We were the first company to commit to basically give support, engage new people. And the most important thing is not only the figures. We have basically engaged more than 8,200 apprenticeships and traineeships positions within our factories and our companies. We have already organized more than 3,500 workshops with more than 11,000 Nestlé employees to help people to prepare the CVs and to basically get ready to start working. And we have been working that with Google, with Facebook. And the most important thing is that there is what I call the Alliance for Youth. Alliance for Youth is, as much as Nestlé could do a lot of jobs, it is more important that we create a movement. And this movement that we call Alliance for Youth, we have today 200 companies. And we have companies like Metro, for example, in Germany, that have joined that, Engie in France, that Solvay in Belgium, that has basically partnered with us. And the idea is we work with the authorities in the countries to promote dual education learning and also to engage. This is helping us to really be part of the society, and we move that, and we believe Nestlé is leading this today as we speak. This is an important point, and it is not just by coincidence, that all these initiatives, plus the fact that I have mentioned to you before, has been make Nestlé improving their position as the most attractive employers in Europe. And this, I'm talking about companies like competing with companies like Google, BMW, Facebook, and biotech companies. So I think it's quite important that the position of Nestlé being number 9, and I'm sure that if we continue doing the innovation and the renovation and the initiative, this figure will improve. My last point is about people, is about leadership, and basically 4 points is about diversity. That's a very important point, because the creation of a Zone EMENA has given me and our people the possibility to start thinking about moving people around. And today, we have increased the number of people, if I may say, between the south and the north. From the south of the Mediterranean to the north of the Mediterranean, we have multiplied by 3 today, and we have plans the transfers of people. So we're taking people from Egypt, people from Morocco, people from Syria, and we're going to basically offering them jobs in the Western world. And we're also sending people with experience in premiumization, in new technologies, in digital, to this part of the world. That's something that, thanks to this opportunity that I call the value creation opportunity, that means a new zone, we are doing. Retaining gender balance, 1/3 of our management teams in the markets are basically composed by women. And we believe that this is a figure that is now getting not only solid, but also improving. We're also retaining talents. And just to give you a sense, if I was telling you that we have 21 markets, and the market has been one of the most important positions in our market, we have basically in the last year moved and change, not only change people, but even moving people around. More than 10 out of 21 has been changed in the last year by basically, as we're telling you before, moving the bench that we have of people. And that's a very important point, which helps to improve. This is what you may know what does it mean, Nestlé and I. Nestlé and I is a survey that it was started last year that we do with all employees. So we send this to the 110,000 employees. We have a response around 80%, and they tell us how they feel engaged, what are the problems they feel. The level of engagement today in EMENA is around 80%, and we are in some of these metrics best in class. And one very important is retaining the best talents. We have identified which kind of talent we like to retain, and we follow this very closely. 70% of the people we like to retain have said that they are very willing to stay and follow a career. I believe that this figure is not good enough, and hopefully by the initiatives we're doing, we're making this figure even bigger, because at the end of the day, it's all about people and not only about processes and systems. So the 4 takeaways for my presentation is growth. In a zero volume growth, deflationary environment, we're achieving industry-leading growth, thanks to the process I have been talking to you, and thank you by embracing different business models that we can develop in the area of our responsibility. Efficiencies, if you are not able to take cost out of the system, if you don't buy better, and you don't take that, and you basically leverage that and identify where to invest, that's what we call the virtuous circle. We're using this as a mantra in our organizations. The concept of being part of the society, working in these 3 streams that I have mentioned to you, and this is something that myself and some of my leadership team in the zone were dedicating a lot of time, and at the end of the day, taking care of what I call the Champions League and the Junior League that is going to make all this successful. So with that, Stefan, I've tried to recover some time, and I think this is a message. I know that you might be tired, but I'm here to address any questions you might have to me. Thank you.